Welcome back. President Trump making it clear that the technology industry is now a central focus in this economy. Through meetings with industry leaders like Apple's Tim Cook, Amazon's Jeff Bezos, what reforms do today's tech companies want to see out of Washington? We're back with our panel, Brit, Ryan, Dan, and Nirav. Great to see everybody. And that's my question for you right now, Ryan, because you're a small startup relative to what we're talking about in terms of the impact of tax reform and some of these policies. What's the most important policy you'd like to see coming out of this administration to help your business get to the next level?
Sure. So the way we think about policies, we leave that to the experts. But at a high level, the theme that I think is important, that's actually pervasive right now in D.C. is innovation. Innovation is good for our global economy. It's good for our domestic economy because it adds transformation, change, and opportunity. And so from our perspective at Cadre, we're innovating in real estate. We want more people to have access to an asset class that builds multi-generational wealth. But the only way that was available and accessible was because we innovated. We said that this existing real estate investing model does not work, and we want to change it for the better. And so I think the most important theme that needs to be pervasive in D.C. and continue to be so is innovation.
So to encourage innovation, one of the things is you want to roll back red tape, right? I mean, that's one of the things that the president has talked about so far in office, making it easier, eliminate the red tape. Do you see that happening? Is it easier for you to take the company forward? And I mean, some people say that's why they're not going public. Right. It's just too much bureaucracy.
Sure. So I think there is definitely a lot of friction in D.C. and there's bureaucracy. There's a lot of friction in real estate. So there's a lot of corollaries there. The way we think, though, about why companies are staying private longer is actually because if you really take a step back and think about the big industries of our time, they're deeply entrenched, right? Real estate is an industry that's been built on some inefficiencies and bureaucracies for centuries in some case. Healthcare, a lot of the infrastructure, government. And so I actually think it's really more a function of needing to take the long approach, kind of the marathon versus sprint, to rebuild these companies and platforms and industries that are very hesitant and resistant. And the best companies are able to continue to raise capital. In our case, we were pretty oversubscribed in our last round. We've raised about $130 million to date. And it's because our investors understand that this is a long game. We are transforming something that doesn't happen overnight. And I think that's probably why more companies are staying private. And the ones, by the way, that don't have sort of an enduring business model, they're not staying private or public. Right. They don't exist.
They're going out of business.
Exactly. Yeah.
Nirav, do you agree with that in terms of the regulatory environment? Any changes you want to see?
I think generally our industry is about innovation, not regulation. And so what we discussed is exactly the case, which is we want things that will help us move forward and move faster, not things that will slow us down. That's the general approach. From a Nextdoor standpoint, we're about local community. And so we look less at what's happening nationally, and we look more at what's happening locally. And amidst the national debate that's actually in everyone's minds today and on everyone's television sets, there are laws and regulations that happen on a local level, and those are the ones that we're focused on. But I think in general, our industry is about trying to create ways for companies to do things faster, to do things better, instead of slowing down a little bit and instead of being held back.
Yeah, and shareholders focus right on the business model, Dan.
Yeah, well, exactly. And so, as regulation decreases, hopefully, the next question is, can these become businesses? So, Brit just raised a substantial amount from one of the greatest media companies ever, which is Disney, and they don't do that often. So they obviously saw something in Brit. So, Brit, what are you going to do with that capital, and what's the business model around Brit Co?
Sure. Well, one thing a lot of people don't know is that when I was starting Brit Co, I did so because I was at Google beforehand, launching a product called Google TV, which has now turned into Chromecast. And in 2009, I was banging on doors of every major television network, asking them to put their video content on the internet. About 95% of them told me no. They wouldn't do that. Why would they ever put video content on the internet?
By the way, you were 24 when you were doing
I was 24 doing this, by the way. I graduated college early, so I'm one of those people. But it was shocking to me as a 24-year-old that I couldn't watch television on the internet. That's what I wanted to do, and I was watching YouTube on the internet, obviously. So Brit Co became a chance to really go at that market opportunity. And even almost 10 years later, what you're seeing now is most networks are putting video content on the internet. Disney is one of them. But now they're actually breaking all of that content away from things like Netflix. I mean, Disney just exited and making streaming bundles, making ESPN its own platform. So what I'm excited about with Disney is the opportunity to think about and dream about what is the next entertainment platform for young women. This is an audience I know very well. It's an audience Disney does not tend to know very well.